The number one question that's on your mind, about cryptocurrency, what does it do? Is that the number one question?
More or less, yep.
What about you?
Okay.
What's the number one question that you have?
That would be it. Yes.
That would be it.
Like,
What does it do?
I'm always like, is it a scam?
No.
All that stuff. Okay.
It is poor man's, poor people's venture capitalism. Okay. So the same way how Uber turned zero profit for how many years? In fact, ran debt. Yet still was allowed to have $1 billion valuation.
Okay.
There were people who invested early in Uber while it wasn't even making money, or they were accounting losses.
Okay.
So.
Right?
Got that.
There were people who invested early, and then when Uber went public, now where did the shares come from? From the early investors. So people who were probably able to get in at $5 or $10 a share, buying 10,000 blocks of shares, right? Spending anywhere from $50,000 to $100,000 or $1 million to $2 million pooled together to help fund this company. Now you want to be able to have an exit. So what do? To raise more capital? We go public. We issue shares, now no longer privately, but we open it up to the public market. The normal or institutional investors, right? Because those are venture capitalists. They saw early companies, saw their potential, found a way to market them, and then bring them public so that they can issue shares out to the public so that they can offload their shares and reap their money and reap their investment back. Normally, those people get 10 and 30, get 5 to 10x on their money. So if they invest 100,000, they're expecting to get 50,000 plus their initial investment back. 50,000 to 100,000 back. 10x, 5 to 10x. When you issue these public shares on the public market, now all these institutions like banks, like pension funds, like hedge funds, individuals with billions of dollars under management that can move $1 billion quickly, now buy these shares up. So, whereas they now are looking at, you're happy if you're getting a 12% return on your stocks, on your investment, when you invest in a stock. But there were people who got in early, before the company went public, they got 10x on their money, 1,000% on their money, in 5 years, in 10 years. So the general public, like us, right? Those with Robinhood accounts, those with Charles Schwab and E-Trade accounts, those with Webull and eToro accounts, those with hedge funds, with JP Morgan private client services, right? They'll be happy to get 12% return on their money, but you really could open it up to everyday people to invest in this, to pool their money together so that they can reap the benefits of an exit from initial funding. Okay. What does that got to do with cryptocurrency?
Right. I'm like, I don't know.
But we're on the same page. I wanted to get us to understand
Right.
how the system works.
I get it.
It used to be that only if you were an accredited investor, somebody that had $1 million in net worth or more than $250,000 in income a year. These opportunities were only available to people in that bracket.
Okay.
Right? That's the top 5% of America. Right? Top 7. Top 7.
Top 10 best.
Top 10, easy.
Right.
Top 10 easy. So now, only the top 10% of America has access to it. So it's by no surprise or accident that 80% of the stocks are owned by 20% of the population. Now, with cryptocurrency, what they've done is they've taken advantage of what we know as Web 3.0. Are you familiar with it?
Web 3.0?
Web 3.0.
No.
Okay.
No.
There's a thing called Web 1.0, Web 2.0, and Web 3.0. What does that mean? What does that mean? The early internet. We remember the early internet?
Yeah.
Right, with the dial-up modem, right? So the amount of information that was on the internet back when we were kids is way more than what we have now, right?
Mm-hmm.
Moves a lot more faster, processes a lot more data.
Right.
So Web 1.0 was just right to the internet. The user was able to read just from the internet. You were just able to read. You weren't able to interact, right? Web 2.0 brought read and write capability. So now you can interact with the websites. So an example would be the old AOL page, where you could only click on hyperlinks, right? And it would take you to places. Then moving to Web 2.0, where you now have Wikipedia, dynamically linked things, where you click on something, and you're now able to edit a Wikipedia article, right? Moving to Web 3.0, where now, in order for me to access information, to access certain sites, I have to have what's called a wallet.
Go.
A wallet is particularly. What it says here is address.
Mm-hmm.
This right here is what's known as my wallet. This contains my cryptocurrency, right? Go ahead.
Sorry, because he came in. So you said Web 3.0. Now it lets you communicate, and interact. And plus, what was the third thing?
Verify identity.
Okay.
Trust. Adding trust. So now, when I go into a website, right? When I go into a website, originally I would have to put in a username and a password.
Right.
Right. Now I'm utilizing a token, a key that acts as the key that says all these credentials belong to only this particular person and this particular person, and only this person that has this key is able to access it.
Okay.
You with me?
Mm-hmm.
That's what we're moving to. So now we went from the user being able to just read from the internet to the user being able to read and write on the internet, to now the user being able to read, write, and then trust and verify where something comes from.
Okay.
So,
That's
what is
Web 3.0.
That's Web 3.0.
Mhm.
That's Web 3.0.
Okay.
Now, how valuable is that to you as someone that wants to track things moving and verify its authenticity at the same time?
Okay.
For instance, if you were able to see every website that your data passed through,
Passes through a lot.
you passes through a lot, and you were able to see that, right? And then decide who gets access to your data and who doesn't.
Okay.
That gives you a whole lot more control. And you're saying that I can verify that this transaction came from this exact person because this person has had this token for since this time, made it public, and there has been no transfer of ownership because I can see it whenever it transfers ownership. So when we go here, we're looking at my what's known as a cryptocurrency wallet, my MetaMask wallet. This particularly is my MetaMask wallet. But I can go on the internet and look at what I have in my particular wallet. Cryptocurrency now is taking advantage of doing commerce on Web 3.0. We've been doing commerce on Web 2.0. right? We buy stuff from Amazon every day, from Walmart every day, buy things online every day, make transactions every day. Now, I'm able to make those transactions outside of having to utilize a bank. On Web 2.0, I have to go through Shopify, then go through some payment processor, then go to a bank before I have access to my money. So there's
enter your card information.
Right, so there's a bunch of other layers that go on that I have absolutely no control over, and the people that have my data that are processing that transaction, they can charge whatever
Yeah, they're making money on that.
they're making money off of it. Now, but guess what happens? When they have data breaches and data leaks, it's my funds that are now at risk.
Right.
I can't track where it goes. Web 3.0 now says I can transact with you. I can do the transaction with you and pay you in the same transaction. If there's data that you need to send me, I can send you whatever data that you need, or if I need to provide a document to you.
So what's the difference? Okay, so somebody's buying something. I'm buying something from Amazon or something.
I'm right here, bro. I'm just getting it.
So what is crypto changing? Like, what would be the difference? Like, I just want to get something from Amazon. That's it. You're saying so crypto would be what in that scenario?
Okay.
How would I use it?
If Amazon accepted crypto, and if Amazon accepted crypto, there would be no need for you to go to your bank.
Wait, like not into your account information.
Beautiful.
And stuff.
I'm about to help you out right now.
Okay.
I threw you out in the water. I threw you out in the water because I wanted you to get your bearings. I wanted you to get your bearings.
I'm like, you know what I mean? People out here at work in Malibu, they keep having to get new card numbers. They keep having to change their card. There's some fraud going on. They're like, how are people getting my information? How are people getting, like, they're constantly have to change.
Yes.
So
Right now.
I'm like, right. So if you tell them the solution, well, you know, you don't have to give out your information. You can just go through cryptocurrency, right?
Yes.
You don't have
I
to.
know, it's for you, but
Okay.
Yes.
Okay.
The challenge is that the United States government does not accept crypto for payment for taxes.
Okay.
So, if I'm going to have an economy, I'm going to have an alternative economy where I pay for my goods and services in this crypto. I pay for my goods and services in this crypto, and we accept it. We accepted its value, and now there's a link between the traditional financial world
Okay.
and this system. So the normal industry hasn't figured out how to integrate it, but there's a whole entire economy that's booming and operating. Why? Because they're saying we accept this as payment, and we can show that even with that.
So once the government like unlocks it, then it could be spread just everywhere. Like basically, a lot more people would do it if the government accepts crypto.
hell yeah, Adobe got hella native crypto plugins.
What do you mean?
Like, so for like our commerce solution, like if somebody wants to pay with crypto, or if your business accepts crypto as a form of payment,
They'll do it.
Adobe Commerce has a plugin for that
That's
shit.
what I'm saying. Like, but everybody would do it.
Yeah, not every commerce solution has that, but
But I feel like everybody would do it once
Well,
the
government treats it like an asset and taxes it like on capital gains. They don't treat it like a currency. They treat it like an asset.
Okay.
So what that means is that there's not an incentive. There's not an incentive for me to go between this new system and the traditional financial system because I'm going to get taxed on it. There has to be a great high financial incentive. If I'm up, if I'm up 10x, right? It hurts when I now have to pay 30% of what I made, but I'm still up.